Hi, Brian here with your Mortgage Insider update for this week, March the 30th. March is going to be over soon, and we'll start to see data at the end of this week about jobs. And, well, I think that's the name of the game these days. All you hear is there's not enough workers to staff my restaurant, my favorite restaurant, or if you're a business owner, there's not enough workers to do the work that you don't want to have to do yourself unless you pay them. So let's take this into a little consideration in the longer run. What does this have to do with interest rates, and how is this going to impact the economy? So I've pulled up a chart of the 10-year Treasury yield. Now this is tracking interest rates on a 10-year Treasury. So this takes us back in time a little bit. Since April of 2019 was the last time that U.S. Treasury bonds, this is the rate of interest that's being paid by the U.S. government when they issue new debts. This tracks pretty well with the overall U.S. economy. What's the direction of interest rates? That's the reason I show such a large time period. So if we go back to May 1st, 2019, we're right there at this red Fibonacci line that we have not gotten to yet, but we can see that in this time period, we saw a period of declining interest rates into the end of 2019, substantially at July of 2019 or August is when the Federal Reserve last cut interest rates. So what's happened here this last week, or the last 2 weeks, is that we've had the Federal Reserve for the first time since July 31st, 2019, they raised interest rates. Okay, so they dropped the interest rate in 2019, but they didn't drop them substantially until March of 2019. I think we all remember March of 2020, there was a lot of volatility and a huge drop off on this rate, but there was also some very up and down days where it was very unstable. And then it leveled out and it stayed low, generally trending up in 2020. And we get into spring of 2021. So basically 1 year ago, right here, interest rates leveled out after they had increased, and then they ended up rolling off and coming down. This was around the time that the Delta variant had come out. Okay, then there was a run up a little bit back to those highs in October of 2021. And then the Omicron variant came out right before Thanksgiving in 2021, ended up not being as extreme as was first feared, but it definitely calmed rate markets down, so rates were lower. And then January 1st of this year, it became very obvious in the eyes of Wall Street, and the way that this is priced is Wall Street bettors effectively saw the writing on the wall that inflation was impacting the economy more than the Federal Reserve was recognizing, and we saw the rates go up. They did settle, but then they spiked. Then they fell. Then they spiked. So my point, rates spike, then they fall. That's really what we're up against right now. Right now, we are generally in an upward trend. Rates have been the highest they've seen since the spring of 2019. So we're 3 years removed from the last time interest rates were at a level that they're at today. What does that mean for our real estate market? If you're financing a house, it's more expensive than it was 12 months ago or 24 months ago, but it's equally as expensive as it was in 2019. The challenge is these homes are a lot more expensive. I mean, if you had purchased a home in 2019, it's easily worth 50% more than you paid for it in 3 years' time. Okay, so that's a pretty extreme increase. I mean, you've got a $500,000 home purchased in 2019, let's say May of 2019. By May of 2022, if you're selling it, you're probably selling it for close to $750,000. So we're going to have to just communicate with our clients, make sure they understand that this is just the life we're living right now, and that in history, I would say that as rates go up, that tends to slow down the economy, and it can spark a recession. So not that we want to promote that, but likely what's going to happen is interest rates are going to go up, the economy will slow. Will the housing market slow? Probably. Will new car sales slow? Probably, if they ever can get the chips to deliver them, right? So we're going to navigate this together and have a great week.